Welcome to Next Gen Infomania, smart news for a smarter generation, delivering truth with clarity, telling every story with integrity, and bringing the world to your screen. One headline, one voice, one unwavering commitment to journalism that informs, inspires, and empower. Down 50%, Trump Media, ticker DJT, has been a wild ride, plummeting after hitting nearly $55 a share. Is this a golden opportunity, a steal for the brave, or a massive red flag, a stock fueled by hype, not fundamentals? Today, we're cutting through the noise, digging into the financials and the frenzy surrounding DJT. Should you buy in or wave bye-bye? Stick around, this one's a roller coaster. What is Trump Media and Technology Group? It's the company behind Truth Social, linked to former President Donald Trump, and they're expanding into streaming with Truth Plus and finance with Truth.fi. DJT went public via a SPAC merger, known for excitement and serious volatility. So, why focus on DJT now? That huge price drop wasn't random. After peaking near $55 around the election, it's tumbled due to market jitters, inflation fears, and Trump-related news. Now, in late May 2025, it's less than half its peak. These wild swings make DJT a constant news item and a hot topic for investors. Is this a buy-the-dip moment, or is that dip a bottomless pit? That's the multi-billion-dollar market cap question. All right, let's explore the buy case for DJT. Why consider this stock amidst all the drama? First, the Trump factor is undeniable. The stock price is deeply intertwined with Donald Trump's popularity and political future. For many supporters, buying DJT is a statement, creating a passionate investor base driven by loyalty, not just financials. This gives it a meme stock quality. Social media buzz can send it soaring, regardless of company performance. Any political win or viral moment could trigger a buying frenzy. Then there's the company's expansion. Trump Media is developing Truth Plus for streaming and Truth.fi for financial tech. These are new and not yet profitable, but bulls see early potential. If Truth Social boosts user numbers and revenue, or if these new ventures take off, it could be a game changer. Plus, a reported $759 million in cash in Q1 2025 and low debt offer some runway. And they've announced audacious crypto plans, raising $2.5 to $3 billion to invest in Bitcoin, aiming for a large corporate stash. This adds speculation and risk, but excites crypto enthusiasts. They might integrate crypto into their platforms, similar to MicroStrategy. For Bitcoin believers who think Trump Media can execute, this looks like a bold move. The company also positions itself as a beachhead for free speech, appealing to a specific audience. CEO Devin Nunes even calls Bitcoin a financial freedom asset. Finally, some speculate on future mergers or acquisitions, which could alter the company's outlook. So, the bull case? It's less about stellar financials and more about brand strength, unwavering political support, the potential of new ventures, and a daring crypto play. It's a bet that hype can fuel the stock, potentially leading to significant gains if these speculative pieces fall into place. Trump Media's financials are concerning for its market value. Truth Social brought in only $821,200 in Q1 2025, peanuts compared to its multi-billion-dollar market cap. The losses are alarming. $31.7 million net loss in Q1 2025 and a staggering $401 million in 2024, driven by high operating costs, including $10.9 million in legal fees in Q1 2025. They're burning through cash. User growth for Truth Social is a major hurdle. While the company doesn't release typical metrics, external estimates suggest a small user base compared to giants like X or Facebook, with some reports indicating declining daily active users. Then there's the valuation. Even after the price drop, DJT's price-to-sales ratio remains incredibly high, suggesting it's still overvalued by traditional standards. Adding to concerns, Trump Media admitted in its Q1 2025 report to material weaknesses in our internal controls over financial reporting and a lack of experienced SEC reporting personnel. While a new auditor cleared past financials, current internal control issues are a red flag. That ambitious Bitcoin plan? It's risky. It means issuing significant new stock and bonds, potentially diluting current shareholders, and exposing the company to crypto's notorious volatility. Insider activity is also telling. Reports show insiders mostly selling shares recently, with no recorded buys in the 6 months leading to late May 2025. Finally, the heavy reliance on Donald Trump is a double-edged sword. While it provides a loyal base, any dip in his popularity could crater the stock. It behaves like a meme stock, driven by sentiment, making it incredibly unpredictable. Analysts warn an election loss could devastate the stock, highlighting extreme political risk. So, the bear case: minimal revenue, massive losses, questionable user growth, sky-high valuation, weak internal controls, potential dilution, and extreme dependence on one polarizing figure. For traditional investors focused on solid fundamentals, DJT is a tough sell. The current numbers show a company with serious financial challenges, low revenue, significant losses, and an uphill battle for user growth in a competitive market. Their own admission of weak financial reporting controls is a major concern for those valuing transparency. By standard metrics, the stock appears overvalued, even after its 50% dive. However, dismissing DJT solely on fundamentals ignores the colossal Trump factor. His influence and loyal following mean this isn't just another media company, it's a symbol. This hype allows DJT to defy traditional market rules, at least for a time, behaving like a meme stock with wild swings based on news and sentiment, not earnings. The big Bitcoin investment adds another layer: a brilliant strategic pivot or a desperate gamble. It undeniably ramps up both potential rewards and existing massive risks, tying DJT's fate to the volatile crypto market on top of its political and operational uncertainties. High-risk speculators comfortable with extreme volatility. Believers in the long-term power of the Trump brand to attract an audience, regardless of current financials. Perhaps short-term traders adept at navigating volatile stocks using charts over fundamentals. But for the average long-term investor seeking steady growth and a clear path to profitability, DJT presents a mountain of risks. Its reliance on one individual, political entanglements, financial losses, internal control issues, and the unproven nature of its new ventures. Ultimately, DJT is a stock fueled by a potent narrative and immense hype, often clashing with its financial reality. The numbers reveal a struggling early-stage company. The hype shows a phenomenon capable of commanding attention and investment for now. If you seek a company with a proven business model, strong revenues, and a clear path to profit, DJT's current financials scream high risk. The numbers show a company burning cash with little steady income to show for it. However, if you're betting on the enduring power of the Trump brand, the potential for hype-driven surges, or believe in their bold and highly speculative crypto ambitions, this price drop might look different. But be clear, this is high-stakes speculation where traditional valuation may not apply, and big losses are as possible as big wins. Ultimately, deciding on DJT hinges more on your belief in its narrative, your risk tolerance, and your investment timeline than its current financial scorecard. The fundamentals are weak, but the hype is undeniably potent. And remember, this video is for informational and educational purposes only, not financial advice. Do your own thorough research and consult a qualified financial advisor. Investing in volatile stocks like DJT carries significant risk, and you could lose money. Thanks for watching NextGen Infomania. Do like, share, and subscribe. Stay tuned for next one.